All right, so I'm going to make my objective for this panel to wake Richard up. How you feeling today?
Good.
All right, so I was told that the audience would get sick of seeing me more than once, and I suspect that that's probably true. But I'm really thrilled to be up here, with these two distinguished guests. They were just introduced, but what I want to do is to begin with is give them each a moment to just touch on the background and your focus, your current professional focus, and the relevance to this particular discussion. So obviously I've dealt with both of you guys and know you very well, but for the benefit of the audience, and Nick, I'll start with you, please.
Sure. Thanks so much for having me, and I'm happy to be here. Hi, everybody. My name is Nick Ducoff. I lead institutional growth at the Solana Foundation. I work closely with banks and asset managers on a variety of different projects. One, of course, is tokenization. Another is borrow lend. Another is custody. Another is participation in the network as a validator, and others. And so one of the exciting things right now is that more financial institutions are looking to get on chain, and they're choosing Solana first. And that's, I think, an incredible tailwind that we have, and one that we'll continue to see grow over the next few years. I also work with the long tail of RWA issuers like the Huma Finances of the world, folks that are tokenizing virtually everything under the sun: real estate, collectibles, private credit, and other equities and non-equities. And then the last thing is that I'm working on on-chain IPOs, and this is something that Kristen talked a little bit about with Project Open, and I can share more about later in the conversation.
Thanks, Nick. Elise?
Super. Well, thanks so much. I'm Elise Susie Watts, Exec Director at Global Digital Finance. We are a not-for-profit industry association, and we work with a number of firms, as well as blockchains across the space. I am a former regulator, so I used to work at the FCA in the UK, which when I told someone that at a Solana hacker house once, they told me I was a Fed and looked at me very angrily. However, I am really, really passionate about why that regulation is so important, both for the TradFi and the DeFi space, because I think if we don't have DeFi voices at the table while these regulatory frameworks are being built, then they are at risk of being edged out of the market totally. And so I think it's really important to have both perspectives. At GDF, we really work hard to do that, and that's why we work with digital natives as well as with banks, as well as kind of everything in between. And then we also work with regulators really closely as well to try to give them feedback on how frameworks are developing, and also to kind of give feedback to the industry about where things are heading. So yeah, very, very focused on both payments and DeFi. And of course, stablecoin legislation, as we heard from Kristen and others, has come up a lot this year as well.
Thanks, Elise. So to kick things off, Nick, you and I had a interesting little chat. We nerd out about these sorts of things, but we were talking about the different, let's call them flavors of real world assets that make their way onto public chains now. And I think these distinctions are really, really important. We'll touch a little bit later on Project Open and how that relates back to that. But for the benefit of the audience here, can you talk a little bit about the more interesting flavors that you're seeing coming into the market now?
Sure. So I'll talk about it as they kind of move along the spectrum to being from more DeFi to more TradFi. So the most DeFi RWA are permissionless RWA that, for example, USDY from Ondo, they use Reg S exemptions. So they sell tokenized treasuries to international buyers. Those buyers can't transfer them for 45 or so days as they're seasoned. Then they can enter DEXs and be traded permissionlessly and used as collateral within the DeFi ecosystem. That's distinguished from, more traditional tokenized equities like Ondo's OUSG, which is a private fund. And there's all sorts of private equities that are being tokenized on chain. You've got a number of large asset managers that have tokenized money funds, many on Solana, Franklin Templeton, Wellington, BlackRock, and others. And then you've got private credit funds like Apollo and Hamilton Lane. You've got hedge funds like Simplify and Brevin Howard. These are all private equities that are being tokenized on chain, some of which are permissioned and some of which have permissionless twins. And then on permissionless twins, we're seeing the tokenization of public equities. And so stay tuned for some big announcements later this week where folks will be announcing that you'll be able to buy pretty much any publicly traded equity, Coca-Cola, Tesla, whatever you want, on Solana permissionlessly. There's also, of course, a movement towards permissioned public equities on Solana, and that's what Kristen was talking about with Project Open. The Project Open conversation with the SEC is especially around Form 10 registration statement for primary capital raises, but there's also a conversation around public equities that are traded via secondary markets on chain. So direct listings on the blockchain that enables secondary trading. It was announced last week that Sol Strategies, which is a Canadian public company, which is actually listing on the NASDAQ, will be traded on Solana via Superstate. And so I think there's a real spectrum of RWA on Solana, from the most permissionless tokens to ones that require permission from the SEC in order to be registered. But I think that those lines will blur over time, right? It doesn't make a lot of sense that you've got all these different kind of approaches to ultimately the same thing, which is trying to democratize access, not only to the buy side. One of the things I loved that Lily said earlier on stage was democratizing the sell side, right? Allowing for more issuers to be able to access capital utilizing the blockchain.
Yeah, I could not agree more with that. And that's going to be a theme later in the discussion. But I want to come over, Elise, to you. And obviously you've got this really interesting and unique background. We've been spending a lot of time here talking about, say, regulatory developments and even commercial developments in the U.S. But you have, and I live in Dubai, so we kind of share that sort of additional view of what's happening in the rest of the world. So I'll frame my question not so much in terms of policy and regulation, but in terms of what's really coming into the market, and where do you see, from a jurisdictional perspective, the most promising developments, and why is it not Europe?
Well, it's a tough question. And I live in Europe. I live in London. So it hurts a little bit to hear that. But unfortunately, I think that you're probably correct. So I'll start with, where I really see positives moving ahead, which honestly is the Middle East. I'm sure a lot of people in the room were also in Dubai and Abu Dhabi over the past couple of weeks. And I think that they have moved so quickly as regulators, which has also enabled the market to move quickly. And I think that when we see there is with the fiat reference tokens or stable coins, but this is how they're defined by the ADGM. And we saw a lot of really exciting announcements about that kind of from both worlds, and a lot of partnerships. For example, Paxos, Standard Chartered, Circle, Binance, all making really important announcements around Abu Dhabi Finance Week last year. And so I think that's one area where it scaled really quickly. And interestingly, Abu Dhabi was also one of the first regulators to enable yield alongside stable coins. And that was kind of their kind of competitive spin on it. Remains to be seen what will happen in other jurisdictions. But I think to your point, that kind of quick moving, but also competitive offer to the market enabled folks to move quickly. I think also, while the regulatory landscape in Dubai is complex, you certainly have many frameworks where you can go and get licensed depending on the various activities. And I think the fact that you can actually just go and apply for that, kind of coming on to the end of your question as to why not Europe, is certainly a blocker for places like the UK. So their consultation on the statutory instrument closes this week. And what that means is it's going to bring crypto assets and statutory instruments into the regulatory perimeter. What that practically meant for the UK is that you couldn't really apply to get a license for many activities in the UK yet. You could be registered and you could have your AML and CTF register, but it has really been a bit of a drag for London. In the EU, and you and I were talking about this before, where you do have a completed regulatory framework, I think in my opinion, what holds back the EU is that you don't have the same kind of capital and investment. So the US and the Middle East both have a very strong investment and VC culture, you really just don't have that in the EU. And so while, yes, you could go and get a license, like, are you necessarily going to be able to get the investment you need? I'm not sure. And so I think that definitely holds the EU back as well. I'm holding out hope for the UK. I mean, let's see how quickly they're able to move. They're supposedly going to finish the regulatory framework by the end of 2026, according to the FCA roadmap. And then you will be able to be a fully licensed operator as an exchange, crypto asset trading platform, or, otherwise for stablecoin issuers. So let's see.
That was a really good point on the market itself, and I think Nick, you had a response. It looked like you were about to respond to that point.
Well, no, I just echo what Elise said, and it doesn't help that Switzerland is not part of the EU.
Yeah. And actually, when you talk about like, what are we seeing? We did see a pretty exciting announcement just a couple of weeks ago from SDX and Citi about the tokenization for pre-IPO equities. And I think that's hugely exciting. But yeah, exactly to your point. It's like, in terms of the scalability across the wider EU, I'm just not really sure that we have that yet.
Yeah. So, Nick, in your comments earlier, and we were talking about the different ways in which these assets can be, brought on chain and made available. But one of the things that it's been sort of a drum that I've been beating for many years. So much time was spent, tokenizing stuff and not thinking about, well, what do you do afterward, right? So we've had a lot of these assets that have been tokenized, but they live in these little walled gardens and they don't really go anywhere. And this is kind of the point of this panel in talking about PayFi and talking about DeFi. You talked about the most DeFi ready being permissionless. Huma's PayFi strategy token is a good example of that. But the criticality of that is DeFi ready means able to access liquidity, right? So what are the trends you're seeing there, or maybe even more, what would you like to see happen?
So I think going back to something I was saying earlier about the blurring lines between, the various ways of asset issuance, I think you'll also see a blurring line around distribution. So if you think about, Bitcoin has been around, of course, for almost 15 plus years now. And what was the catalyst that really drove it to mass adoption? It was BlackRock, bringing it into brokerage accounts, allowing large institutions and retail to buy it in the same, interface that they keep the rest of their investments. And I think that's really interesting. And you're starting to see those same large TradFi players wrap more native digital assets. Of course, there's Bitcoin, Ethereum, and then there's a variety of filings for, many of the top 20 plus digital assets to bring that to buyers who are already logging into, the same fintech, brokerages and other ways that they buy those equities today. I think blockchain is a bit scary for, many institutions, and also I think for the ordinary retail buyer, especially those that may be like older. And so the thing that I would like to see is more protocols make the blockchain disappear, and also find ways to distribute RWA via Web 2 channels. One example of that is Denari, which is one of the issuers of these tokenized twins representing public equities on chain, is they've found some real success in Latin America marketing through, fintechs like the new banks of the world that have distribution in those markets. And so I think it's both bringing traditional assets onto the blockchain via tokenization and then bringing native digital assets into TradFi through the channels that buyers are already active in.
Yeah, I couldn't agree with that more. I think it's hugely important, and I think we hopefully will see it, but absolutely more of it should happen. The pre-existing retail investment platforms should be supported and enabled to make those product offerings. But I think it's important to remember why that necessarily hasn't happened to date. And it's because there has been so many punitive regulatory treatments that have occurred. And I mean, there's still, the Basel risk weighting, the 1250 risk weighting, which is a major deterrent for a lot of banks. And while it hasn't been adopted in the US yet, it has been in many other jurisdictions in Asia and in Europe. And so I think think that when those blockers can be removed at a global level, we'll also hopefully see more adoption, but also just the regulatory certainty, if you're like a Fidelity or, Interactive Investor, for example, in the UK, that your regulator isn't going to be breathing down your neck if you want to offer these kind of products.
Yeah, totally. I mean, we'll get the market structure bill, I think, later this year, and that will help a lot.
Yeah, no, and again, I'm right there with you guys. It's one of the interesting things. I talk about this a lot. We have this kind of an ecosystem where we've created this language, and a lot of times it's it's almost, sometimes you run into folks and they say, well, look at this, I've discovered fire. Like, no, it's just a different name for something that's been done for many, many centuries, right? But nonetheless, that accessibility and that expandability and the point that you're getting at is when you can take those concepts and you can abstract the complexity and abstract the, kind of the mystery away from it, but then capture the new types of behavior that we're seeing, right? So one of the things that we observe, with Huma is that the way that these retail consumers are interacting with assets is not the way that your old broker, your Schwab broker, brokerage account, appeal to you. It's a totally different kind of dynamic. The introduction of tokens and things like that. My observation is that principal protection becomes paramount and token upside becomes, and it's really an interesting dynamic. Now, if you could mass market that without all the complexity and all the mystery, and I think this is what you're getting at. So in that, and I want to come back to, these marketplaces. I mean, Project Open, it's a fascinating concept, right? Digital IPOs, right? Disclosure regimes and all of that stuff. So presumably we're also talking about, and I'm going to kind of open it up for dialogue with a former regulator here. You can streamline the delivery system, but if you don't streamline the disclosure regime, right, you have a right up front bottleneck. How do we bridge that gap?
So I actually think that there's a pretty straightforward principle here that I firmly believe in. And to be clear, I don't know if every regulator would agree with me on this, but it is not the job of regulators to make decisions on behalf of consumers or businesses. It is the job of regulators to create a perimeter and an environment in which people and businesses have access to the information that they need to make informed decisions. And so that really, to me, answers your question is like, okay, yes, do they need to have the right disclosures? Of course, they should be able to have access to that information, but also it should be accessible in the way that makes sense for new consumer behaviors. So maybe that doesn't look like having all of the information on the regulator's website where no one in the Web3 world is going to find it or even know it exists. Maybe that looks like something different. And so I think that the regulatory community also has to think about how it can be more agile and more future-proof and work with this new evolution of finance.
I'm a former securities lawyer, I guess a recovering or retired one, depending on how you want to think about it. And I think sensible regulation makes sense here, right? I think disclosures are appropriate for many digital assets, especially ones that are more centralized, do have central management, are looking to have the holders profit. But that doesn't mean that every token is a security. And I think that's what the last administration got wrong.
Yeah, and when we think about disclosure regimes, I say it not entirely jokingly, but that regulators, even the nastiest disclosure regime they could come up with doesn't rival crypto Twitter, right? That's a really detailed examination from the public. But
and that's an interesting point, because honestly, this is a lot of like the conversations that people are having at the moment when it comes to things like market abuse, admissions and disclosures, and what those regimes look like. It's like, okay, well, something that might have been considered insider information in TradFi, like unfortunately, that's like already in the public domain in quite a few different ways in the crypto space. And so actually it's like thinking about what new definitions of insider information look like, what new disclosure policies look like for staff to make sure that they're not abusing, their privileges and things like that. And I think that it does need to look different because the industry is evolving and finance is evolving.
Yeah, no, I agree. So Nick, if there's someone sitting in the room saying, what does Solana think are the most promising sort of PayFi, DeFi, RWA, I'm not supposed to use that term, but it is a term. What do you see? What would someone coming to you saying, what do you think is really exciting and where should we be focused?
Not investment advice.
Yeah. Well, first of all, Solana is a public permissionless technology, it's everyone in this room, right? So I don't know that Solana has an opinion on anything related to that, but if you're asking what my opinion is.
There you go.
I'm also not sure I want to share that, but listen, I think it's a really exciting time to be a DeFi investor today. You've got more access and choice to participate in decentralized finance than ever before. 15 years ago, before app chains were available, all of the value was ceded to the folks on Wall Street. Now, every one of us can participate and capture some of the value chain. I think that's incredibly exciting. For example, you've got BlackRock and Apollo that have tokenized equities via Securitize on Solana. And they recently announced that they'll be making permissionless versions of those. That's called the S tokens. So basically what you can do is you have to go through KYC, you have to be accredited or otherwise able to purchase the underlying equities. You can then go and mint the permissionless version and take those and participate in DeFi. And I think that creates all sorts of new exciting financial primitives that most institutions and retail investors weren't necessarily able to access previously unless you were a pension, an endowment, someone with hundreds of millions plus dollars. So I don't know if this is really an answer to your question, but I think it's an incredible time to be a participant in the blockchain ecosystem as an investor.
I think it was a good answer. Directionally, this is where we see things. So, again, going back to your sort of multi-jurisdictional viewpoint, what are the exciting trends that you see? Maybe not specifically coming out of the U.S., but from your vantage point across the pond, as it were.
Yeah, so I think, I am personally very excited about the developments in the UK. I think that, it will be really interesting to see where we land with regards to both the statutory instrument and then the eventual FCA framework. I mean, London as a financial hub has been one for many years, and I think there's still potential there. But we'll put that aside because I don't think it's the most exciting. I'm just personally excited about it. Also, honestly, I'm really excited about what's happening in APAC, which is now moving really, really quickly. Like we've seen a flurry of kind of developments coming out of Hong Kong, Taiwan, Singapore updating their guidance, Japan kind of coming online, South Korea coming online. And I think that is huge. Also, one thing that's really interesting about the APAC jurisdiction is they seem to be learning from each other a bit better than other regions. Whereas I feel like sometimes in the Middle East, we talk about this, there's competing regulators, which is not always the most helpful for industry. Whereas in APAC, they're like, okay, Hong Kong did this. This is how we can put it into our framework. All right, this is what we saw in Singapore. This worked well and it didn't. This is how we can update our guidance. And I think it's enabled them to be a lot more agile. And so personally, I'm very, very bullish on the APAC region. Not so much Australia. That's probably a conversation for another day. Yep. But yes, very excited still about the Middle East as well. And I think that the reason for me is because I really appreciate the open dialogue that regulators are willing to have there. And I think, if you're ever thinking about, should I move my business there? Should I open it up there? How can I get licensed? Reach out to the regulators, genuinely. They would be so happy to have a conversation with you. They are not going to take enforcement action against you. Like they will genuinely have a conversation. I'm sure you know that of living there as well. And so that would be something that I'm really excited about for that region as well. And, EU, let's just watch and see what happens because MiCA implementation is going to be a very interesting time. I think actually, and this is maybe not the most positive note to end on, but we're going to see actually probably a lot of cases brought to the courts because if you think about MiCA as opposed to MiFID, there's no jurisprudence yet. which means anytime that there's a dispute, it's probably going to have to go to court. And I think that will be very interesting to watch to see where some of these things land, where we actually get clarity on the implementation of the level 2 text. So yeah, but excited about the US, and would definitely echo Kristen's points as well that she made earlier, that I'm really, really hopeful about US legislative progress. Let's just hope we get it in before the midterms.
It's a really good point in nerdy lawyer talk. A lot of cases of first impression coming up, right? So
I'm not a lawyer, actually.
He is. Recovering lawyer. So this has been a really fascinating conversation. We're just at time here, so I just wanted to thank you both for sharing your insights, allowing me to put you both on the spot at various points in the conversation. And I thank the audience for mostly staying awake. Thank you.
Thank you.
Thank you.